Hello, this is Martin from seekedge, the channel for learning about investment and trading. Welcome to the weekly market analysis for June 28th, Monday 2021. As usual, in the show, we would look and see what happened in the markets last week and how we can plan ahead to trade for the next coming week. Last week, what did we see in the market, right? So we could not hit the all-time high last week. We had a higher high candlestick pattern for the previous 7 weeks, but this time we fall short of making another higher high by just 6 points. So the weekly, we have a bullish green candle that is after a spinning top that happened last week when everyone thought that that's an indication of a crash, but this week market entered with a bullish candle. Nifty moved nearly 400 points, right? There was a recovery from a correction that happened which dipped to 15450 kind of levels. So right now Nifty is halting at a very important critical major resistance zone, right? That was tested 5 times earlier and near to the all-time high. So the latest candle in the Nifty, you can see it's a hammer, which is kind of a bullish pattern, a green hammer. While BankNifty, if you see, has a wide range bullish candle on weekly and daily also. So BankNifty moved 1500 points of recovery last week after it had dipped near to 2000 points the previous week correction, right? So Nifty is bullish, and also we can see there is an open low candlestick pattern that shows clear bullishness in BankNifty. Let's see what we are talking about, what all things that we had been talking about the price actions last week. Let's see it here. Look at the hammer on the Nifty. Look up the open is equal to low formation, bullish candle, wide range with open is equal to low formation, right? It never went down, right? That's clear bullishness. Hammer, potential bullishness. Look at the candles, right? Look at the candles on a weekly time frame. This is a spinning top here, a spinning top here previously. After that we have a wide range green bullish candle on both BankNifty and Nifty. Look at the Bollinger Bands on the Nifty. You can see that the volatility is contracting slowly. Look at BankNifty, it is already contracted, right? It is already consolidating. Support resistance levels, right? So it's at a major resistance, as I said before. It is tested several times, and 15901, if it is broken, then we hit another all-time high, and we have a psychological rounding number of 60,000 just above that. So immediate support is 15700, that's a moving average 20, and 15600 previous swing low, and 15500 below that. These are all band levels. No, there could be 100 points up and down. When I say 15500, no, there could be, it's a band, it's not a precise level. So these are the support levels. BankNifty has 3 previous resistance as before, right? 37,700, 36,500 and 35,800, and a very good support that is seen near to 34,000 band levels, right? Bollinger Bands showing consolidation in BankNifty and potential consolidation in Nifty also. Clearly again we have already seen that. Let's see what we are seeing, supports and resistances on the charts. So you can clearly see that it's at major resistance. You can see a lot of supports at Fibonacci levels of 23 and 38, right? So the major support is going to be at the 15,500 levels. On top of that you have again support at 15,600 levels, and then above that you have the resistance on the Nifty. BankNifty similarly, you can see that it is approaching a resistance at the 35 5800 levels, and after that it has the all-time previous resistances at 2-3 previous resistances are there. It has good supports at 34,000 levels. You can see that marked here. Let's now look at the momentum and the trend. The RSI momentum is showing that on all time frames, short term, medium term and long term, Nifty RSI shows it's still bullish. Nifty has a bullish positive reverse divergence. Actually it has two, one that is formed earlier and the one that is newly formed now, both of which could take the market to 16,000. Bank Nifty momentum continues to be in the sideways zone and it's currently resisting to climb above the 60 RSI. Weekly and monthly has no issues, they are bullish. What about trend? The ADX trend of the Nifty is saying that it's bearish. It continued to be bearish after it crossed over earlier on the daily time frame, while weekly and monthly has no issues, it's in bullish. So the ADX trend for the Bank Nifty, it has crossed over to bullish zones. Now it has become the other way. Nifty was bullish and Bank Nifty was lagging. Now it is the other way. Now the trend of Bank Nifty ADX indicator shows that a crossover has happened, and on all other time frames also Bank Nifty is bullish. So momentum is what so you can see the Nifty price is moving up and the divergence which is bullish. Again another small one which is bullish, which has almost met the target. So its overall bullishness can be seen from the divergences that you see on the momentum and the price. Bank Nifty does not have any divergence, it continues to be the side zones. What about the trend? The trend in Nifty is seen as continues to be in the bearish zones, while Bank Nifty has crossed over into the bullish zones on the daily time frames. Now the chart study is over and now we are getting into the open interest analysis. Open interest is that of futures and options. For the futures, it is showing short covering build up that has happened last day. Currently short covering is what is happening in the futures contract of Nifty as well as Bank Nifty, which is bullish. Short covering is they are covering the shorts. People thought they will short and then it is going up, so they are covering it and then going the other way, which is slightly bullish, right? So the option interest data is showing 16,000 itself as for the July 1st expiry, that is highest resistance. Then close by we have 1500, right? But the highest support zones is at 15,000 levels, and the closer support zone, which is high level of put rating, is seen as 15,800 and 15,700 levels. Bank Nifty 36,000 is highest call rating and 35,000 is conquered, and that is where the major support is going to be, right? So the put call ratio has gone the other way. Bank Nifty is now lagging behind, but Nifty is now lagging behind Bank Nifty. Bank Nifty just turned to 1.1 put call ratio PCR and Nifty, so Bank Nifty is more bullish. VIX fall nearly 20% last week and is settled at 13.3 levels. IV is above HIV, but IVP is at very flat level. That's the new volatility regime, right? So OI support is also somewhat matching with what the charts already said, right? So 15,800 to 16,000 is where the action is going to happen in the Nifty, and 35,000 to 36,000 is where the action is going to happen for the next expiry for the Bank Nifty most likely. Let's look at the sector. The IT sector is bullish with very good strength and momentum and trend in all time frames, but it is at all-time high, so that sector has got an indecisiveness that is seen in the charts. FMCG is bullish, it is corrected a bit, and now there is a bullish momentum divergence, positive reverse divergence that is seen, that could build up the momentum and bounce the FMCG sector again back next coming weeks. The metal is in the sideways on a short term, right? Other medium and long term it is fine, there is good momentum. So until the short term momentum picks up and goes to the bullish ones, we have to wait before going long on the metal stocks. The auto sector weekly has got a range shift that has happened, and therefore coming weeks it could move up and bounce up. Pharma continues to be in the sideways zone, right? but medium and long term is intact. So for the short term, we have to wait for it to move from the sideways to the bullish zones. Let's move ahead and see what is the foreign institutional and domestic institutional participation that happened in the market last week. Last week, FIIs bought 3,000 crore in cash market, but there was heavy selling of 6,000 crores. Almost all days they were selling, thanks to the domestic institutions who bought 7,800 crore, and that is the recovery that happened because of the domestic institutions, which are mutual funds and others like that. So the recovery happened because of that buying, not from the FIIs. Not very positive, but DIS buying strongly even at the all-time high is a good thing for the markets to move ahead and hit the 16k at least. Net longs and the derivatives also for the institutional investors has seemed to be going higher up. What about the global markets? Global markets had a major Fed event, and US markets, all of them, Dow, S&P 500 and Nasdaq, all have recovered and showing green candles as of now. Last week was the recovery from the previous impacts, minor impact. Dollar index has dipped and consolidated. Last week it was pure consolidation after one dip. After the up move, it dipped and then consolidated. USD-INR is at a resistance role and consolidating, and it is showing a gravestone doji, which indicates a potential reversal downward. Right. Gold is showing a bullish harami candle. You can see that on the side how the gold weekly chart is there, and up you can see the USD-INR currency pair performing. It is within the channel. It is also within the channel, but it is consolidating at the support, and that other gold is consolidating at support, and USD INR pair is resisting at the resistance levels. Can clearly be seen. There is lack of momentum in the gold, but it's a support level and is consolidating, and after some time it may move up, and probably this may be the time for investing for medium term. What are the actionables for the next week? Right, a moderate bullishness is what your view. Then you can go for bull call spreads on the Nifty, right, at the support and resistance level that you can see in the next slide. BankNifty has strangled 35,000, just been conquered, and is a major support zone on the open interest data. Is giving a very good risk reward of 1:2, right? Assuming that it will not make a 1,000 plus move in a week, right? You can see that the strangle with the hedge position for the BankNifty 35,000 straddles, not a strangle, sorry, it's a strangle with the hedge positions at 35,000 for BankNifty, and a bull call spread of 16,000 and 15,800, right? Both that is giving 1:1. BankNifty actionable setup is giving 1:2 risk reward, so you can go for this at your own discretion and after consulting a financial advisor. It's not a recommendation, right? It is only for educational purpose. So the wrap up is that markets corrected last week after a moderate previous week's correction, and BankNifty has turned bullish. The Nifty will hit 16,000 for sure, right? But it's consolidating just before that. The daily chart is showing that there is bullish momentum is there. Momentum bullish divergences are also seen, which is very positive. The most important thing is the BankNifty trend has crossed over to bullish zones, because that was what was lacking and holding the big Nifty to consolidate, not to move up. Right. So now that it has joined the rally, it's a very positive thing. So positional longs don't continue to be long, right, unless you get a signal or a support breaking. So volatility is very low. So one way it's good for the buyers to have a upward bias move, but there are V-shaped recoveries and choppiness that is happening even at this low volatility. So we have to wait, playing the price action, or use the safer spreads. Bullish spreads can be used, right? That's a wrap up on what I have. So once again, request you to kindly subscribe, leave us your feedback, share it to your friends, and hit the like button if you like it, right? Happy trading, happy learning. Bye.